Welcome back, everybody. It's another podcast from Jeff and Jared. And we were just talking about it. We're early on in this podcast, and we have a very clever name called the Jeff and Jared Stock Market Podcast. We don't want to mislead anybody about who we are and what we're talking about here, right?
Yeah, you can't get it twisted.
Nobody's going to come here and be like, when are they going to talk about, travel or what? We're not. So we're just diving into this stock market stuff. So there's a lot of wild topics to discuss. I would say we're pretty deep into summer. And summer is always a good time to reflect on, life choices for one, but certainly what the stock market is and is not doing.
100%,
Anything,
man.
what are you feeling?
So, what's funny is it's been we talked about this a little bit last time we got together. Is you look at the S&P and you think, wow, it's been a remarkable year. You look at the average portfolio and you're like, hey, wait a minute, something's not adding up here. Maybe I own a bag of bricks or something, but we're in this really weird dynamic. And time of year, may not play a role, but it's been kind of a one-way theme. And for a year of and especially this time of the year, quiet, they say summer doldrums, blah, blah, blah. There's some crazy extremities going on out there right now, right? And I think that's one of the biggest things about trading is what is going on that's super, super abnormal? What's a relationship out there that's extremely stretched? There was a chart flowing out around there about, a lot of people made the comparisons to the S&P 500 and the RSP, which is the equal weight index.
Yeah.
Equal weight index hasn't moved for a couple of months, right? It's pretty level.
Yeah.
In fact, if you looked at anything other than the S&P or the NASDAQ, which is where all the weighting goes into just a small handful of momentum stocks, the NYSE, the Dow, the Russell, the RSP, which is the equal weight index, everything's pretty flat, for the last few months. But what's interesting about that relationship is when you take the RSP and you measure it against the S&P, the dispersion between performance hasn't been this bad since 2008. And that usually ends up being kind of a marker for things. And so it was funny, but today, I haven't been in a good mood about this all year. I've been just super frustrated. You can't play another story. You can't play another theme because nobody wants to touch anything until we get interest rates sorted out and we get a little bit further in economic data, right? Soft landing, hard landing, recession, whatever. But funny enough, since we talked last, what NVIDIA's done, right? Wild. And then as NVIDIA dropped, I think we talked about measuring that against Alcoa, right? Alcoa rips. NVIDIA drops for 3 straight days. Alcoa rallies hard for 4. That one-way trade, that one-way pulse has sort of faltered a little bit. And breadth since we did our last episode last week, has actually expanded. So like I said, I haven't been in a good mood about this whole dynamic all year, but today for the first day, I'm things are starting to open up a little bit. And it's a very uncommon time of the year for that to happen, but it's happening. And I think that's a really good sign and something people should probably look forward to.
First of all, I'm glad to hear you bring that up because, I've been thinking the same thing. Am I too focused on the stocks that have not been doing a ton over the last 12 or 18 months? Or is it just that there's so many stocks that have not been doing a ton over the last 12 to 18 months? And I think there is, right? And hearing about the disparity between RSP and STY going crazy, since 2008, right? We're at extremes. And it kind of brings up now, I'm going to throw this out there. I know this is not anyone's favorite topic, but let's look at this for 1 second. Here is just a look at a couple of the basics, right? Who knows how accurate any of this stuff? It's accurate, right? But when does it play out? When does it affect things? And I just feel like I've been looking at some of the basic numbers, right? PEs and price to sales and price to free cash flow and so on. And I wouldn't say that this is always on my radar, but it feels like there's a lot more companies that are way above the mean or way below, right? You take we've got Block here, we've got SQ, and you can see their PE sitting at this. This is a 10-year. I think we're looking at a 10-year average here. So sitting way below the mean. You've got price to sell way below the mean. Price to free cash flow up a little bit. And some of their other metrics are just way below, right? If you and you look over at something like the 4-letter word, right? I don't even have to type it in because there it is. And we look at that same time frame, keeping in mind NVIDIA was worth like nothing for a really, really long time, right? Nobody cared about NVIDIA. I mean, it was a teens and 20s and 30s and 40s. But all of that 10 years has been made up in the last very short period of time. And this is already above all of those median periods of the last 10 years. I mean, so I guess the goal, what I'm trying to say here is, I feel like I'm seeing so many more like far extremes, one or the other. Companies that are still making money, but they're trading at crazy low multiples of earnings, or they have tons of money and nobody cares, right? They're good, solid businesses. They're making a lot of money. They have a lot of padding. They're about as safe as a bet as you can get, and nobody's buying them because everyone is focused in these handful of stocks that are now so far above their 5 and 10 and even longer year averages that there's like this blurred vision of, I don't care what I have to do, I will buy any of these stocks at their highest point.
That's the funny thing about this market. I think last time we got together, I said half the market is extremely like record-setting cheap relative to itself. And then the other half is like extremely expensive relative to itself. And that's a crazy thing about momentum in Wall Street, man, is like when there's a train in motion, people will say, you know what, Square's a good company, but I can deal with that later. I have to make sure I'm overweight this name while the getting's good, because no one knows how long it will last. No one knows to what degree. They just have to be involved. And that's been the craziest thing to me, man, is it's like, a lot of people treat it like a guessing game. If there's stuff that I don't know, I don't get involved. But I think that's kind of what I'm saying about with all the signals going on right now during the summer, is that I kind of think that momentum train has kind of reached a little bit of like near-term pause. Like there was some hard selling between our last podcast and now, some real big volume selling. And so that's when that like, the transfer process from big fish to little fish has kind of taken place in the near term, and things probably level out for a while. But as that trade, the momentum trade has leveled off, that's allowed so much more of the market to like put in some lows and some footing and start moving a little bit, and it's really, the dispersion is wild. I mean, I think what's great about these markets, when you have low implied correlation from stock to market and you have just low general implied volatility after you had a significant heightened range of it, is that the dispersion is so significant, it just becomes a stock picker's market. If that momentum starts to wane a little bit now with like NVIDIA and AI, then people are going to start thinking about, okay, now I can think about, the interest rate trade and what kind of stocks should I be looking at when interest rates come in? What are we looking at? Like right now, we're at a unique time of the year in an election year where we got a debate tonight, and we're going to have a bunch of two airheads getting together talking about rah, 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 gonna stimmy the economy or whatever, right? And that's always good for, just a little bit of stock movement one way or the other. They'll talk about things like China, which I'm a huge fan of. They'll talk about all kinds of things. And like now remember, for a market that I think is probably more accurately judged by a relative strength S&P or an NYSE, which has done nothing for months, pretty much most of the year, I think a little bit of rah economy and stuff like that is actually going to get that stuff to continue to develop its own momentum and throw this bigger momentum trade kind of into reverse a little bit and allow more money and more focus to go into other places.
I think that is so overdue too. I mean, we need to see a little shift in momentum. I mean, how much more are people going to buy NVIDIA? I mean, give me a break. It's gotten to the point where I feel like I can't even talk for or against NVIDIA because there's so much talk on NVIDIA. there's one guy that posts just lots of charts about everything, and I can't even remember what his name is, but you know, it was making this comparison this morning between Microsoft and Cisco and Nvidia and Microsoft now, and you know, and all the similarities of 2000 versus, you know, current, and I was just like, we're literally going to talk ourselves into like who knows what. I mean, it's just so on everyone's lips. Did you see the picture going around like 2 weeks ago where what was the CEO of Nvidia was signing that girl's chest? Do you see that?
No way. No.
Like there was like an Nvidia event, and this girl was like, sign it, and he had like a marker out, and everyone was like,
so he went full Happy Gilmore.
Full Happy Gilmore. He was just like, all right, and I mean, that's got to be the top, because I just feel like it's so worth bringing up. Signing.
That's actually mind blowing. That's so indicative of what, like, I don't obviously I view this as problematic. It's so abnormal, and if risk taking and investing turns into a party scene and stuff like that, it's like anytime the crypto boys are doing lines, then you know you got to get out of your crypto, right? Because then it's going to start collapsing on you. So it's same thing in equity markets. There's signs of, you know, you watch The Big Short, and you know when the mortgage bond sellers are having huge parties, and there's crowds of rooms to view a completely boring, unsophisticated product, you know that there's been probably a little bit too much risk taking going on.
It feels a little like that might be the end of the show. Here is, and there are countless of these pictures, by the way.
My gosh.
I mean, signing. So this just screams that it's time for a momentum shift. But I think what really is blowing people's minds. Tell me your thoughts about this. So who was it? Hopefully I didn't talk about this last time, but I heard somewhere, was Druckenmiller the one? Did he kind of train under Soros? He worked with Soros for a bunch of years. Was it Druckenmiller, I think? So apparently Soros is famous for saying, I love a bubble. I love trading into bubbles. I just don't like staying in bubbles too long, right? You know, he's the guy that's like, bring on the high prices. Like, I'm down. It's just you gotta get out of the bubble. And Nvidia is like blowing people's minds, because I mean, talk about a bubble. Every metric you can see right now, it's like, okay, this sucker's gonna have to like level out. It's running out of gas at some point, but then it just keeps going and it keeps going. And it spent 3 days as the most valuable company on the planet, and then it dipped back down a little bit. But I mean, I think that's got to be like that topping out process where it just goes up one more good time and it's back up as the most valuable company, and people go, screw it, I'm getting in. And that's where we can count on the top of the market and the complete stopping of this Nvidia craziness. But I don't know, are we there? Is there one more push?
I think it's time for it to slow. Like we talked about last time, I think it's time for it to level off a little bit. And really, I don't think anything bad happens necessarily until you can create a situation where you leave the public stuck. And usually those type of things happen over earning surprises or downgrades into pressure, things like that usually cause buyers from above to start creating a weight on buyers below, and then it creates a problem. But we're not there yet. It's only been and the thing about that chart too is how steep it is. When anytime the way tops happen in any kind of stocks, you look at ARK a few years ago, it's when you get fast up and fast down and you start to create that A-shaped type of movement. That's when it's going to be a little while before we get back there, if at all. So, and the fact that it's kind of taking on that look right now, I'd look at other things right now. I think is probably a good time to be doing that.
Also known as don't be the one caught at the top. That's a bad place.
Exactly.
So you were trying to sneak in before I hit the record button some GameStop chatter because we got we got GameStop trying to make the headlines, and I don't think anybody is GameStop has kind of come and gone, and I think where the interesting point is, I mean, do you see another GameStop? Are you, is something on your radar that you know, I mean, all over Twitter and everything we saw, you know, the Roaring Kitty's having a live stream, and he's just going to be like, I'm not a cat. And they're like, yes, you are. Tell us what we're doing. But
Yeah.
and we've watched the guy. I mean, I just see occasional posts. I mean, it's made it to like Wall Street Journal and everything. I'm like, is this really financial news? But I think he's lost like half of his net worth over the course of like 10 days. So it's the GameStop you know, repeat is not looking so good for him. But I mean, what do you think? Is there a GameStop 2.0? Is there a better one? What are you looking at?
Here, I got so many thoughts on that because, you know, I was involved early in GameStop too. We bought a bunch of it at $4 a few years ago before the big run up for the same reasons. You saw that it was heavily shorted. Playing heavily shorted stocks is one of my absolute favorite things to do when it comes to trading stocks. But here's the thing, and like when you think of GameStop, you also think of like AMC and stuff like that, right? So here's what I do know is when you have an event in one of those stocks that takes place like what did a couple years ago, it will never happen twice, right? But everybody, because they saw it happen, thinks that it's going to continue or there's another chance. Listen, that stock went up hundreds of thousands, tens of thousands of percent in a short space of time. It will not happen again. And case in point, like what happens is like that guy left hundreds of thousands of people in ruin. Like there are documentaries out there of all these bag holders saying, I bought GameStop at 200 and everybody said it was going to moon. And I didn't make it to the moon or whatever. Right. Like you got so many bag holders in that thing that if you're long that stock from 80, 90, and that thing spikes to 60 and you've been sitting in a loss for 2 years, you want to try to get some of that money back, don't you? Because your wife's been nagging at you. You suck. You threw away all of our family fortune buying GameStop at $100. I hate you. I'm getting a divorce. And so you've been sitting in there sweating out this loss for 2 years and you can get some of that money back. That's what happens is like, remember, GameStop is really just a crowd of people. It's a crowd of shareholders, right? And I love that the CEO got smart and started playing against these guys. Okay, you want to buy some GameStop? Here, take 100 million worth of shares. Poof. Like, that's shades of Eddie Lampert right there. Eddie Lampert used to smoke his shareholder base or his doubters, or like even Elon Musk when he had a bunch of shorts betting against him, he would lit them on fire. So it ain't going to happen again. But like, notice that this chatter with GameStop and AMC comes around. Look at what Cinemark's been doing. All these guys sitting here holding AMC, and Cinemark is probably up 40% in the last like 3 weeks. Like now that some of this chatter's been going on. That's a pain trade is when you own the wrong movie theater. But the thing is, because the same condition exists, everybody's short a movie theater because movie theaters are trash and nobody goes to them anymore. But AMC has got a bunch of people sitting in it waiting for it to go up, whereas Cinemark doesn't. So Cinemark's got some shorts in it, and it's starting to rise pretty quickly all of a sudden. And everybody's going to be sitting here holding AMC. Well, Cinemark ends up being the short squeeze. That's how this stuff works. Like, people have to keep. Go ahead.
Well, I was just gonna say, you know, I think all anybody has to do is look around a little bit, right? Didn't who was the McClellan Fund guy? Peter Lynch. Was it Peter Lynch?
Yeah.
That always had tons of crazy sayings, you know, and he's like, look. Find some stuff that you think is cool. Find some stuff that you think stinks. Go from there, right? And I went and saw, you know, we got a bunch of kids and dogs and craziness, and I had to sneak out by myself and go watch Mad Max. So I was like, I got to see some Mad Max. So I went by myself, and it was actually hard to find a movie theater that was playing.
Was it just you and the janitor?
It was just me. I didn't see a janitor. I was literally the only. So I come out of this movie and I'm like, there's no other people. It was a little eerie. I'm like, this is kind of like, you remember like during COVID, you go to grocery stores and it'd be like empty aisles, there's no food, and you're like, is this what the apocalypse is? You know? And I'm walking out of this
movie. A little bit of Mad Max, right?
Oh, totally. I'm like, where's Valhalla? Like, let's go. And then as it turns out, so then my wife is down dropping kids off and had like 2 hours to burn. So she takes one of my kids to go see Garfield or whatever. same thing. She's like, it was me and Izzy. That's it. We're the only two people in the movie theater. So like, there's something going on there. But you're right. Everyone is waiting for AMC. They're waiting for GameStop. I'm just gonna verify your point right here really quick. Here's a quick chart of here's Cinemark from June 5th, which is a whopping 3 weeks. We have 3 weeks here, and it's up 30% almost in 3 weeks. Who's trading Cinemark?
Yeah, empty movie theaters is going up in value. You know why? Because everybody's sitting there holding on to a dead share of AMC, waiting for a pulse. It's dead. It died. You're holding on to the remnants of what used to be a thing. It's not anymore. You got to move on. And so, like, if you want to go find the next big thing, two things you got to look through. Number one, it's got to be a story you can sell to. What do I want to call that crowd? The non-sophisticated, right? Something that they can relate to, they understand. And you got to go find something that, people are betting against, and they're doing so in a lazy manner. And if I had an idea, I bought this today. I bought stock and I bought some options. Beyond Meat, fake meat.
Let's have a little peek at some Beyond. Okay.
So just sitting there, pretty dead, just like most other things. But like, check out the short interest. I mean, it's not what GameStop was. GameStop was pretty significant, right?
Let's see what we have here. Hold on. Let's see how our short interest is doing on a good old. Where is my short? Oh, there. Shares outstanding. Hold on. I got to go to. I'm forgetting my spots here. I don't look at my short interest too much. What is our short interest?
There should be about 40% of the float, and that's a lot. So if somebody's like iffy companies, will be like people that are aggressively shorting might be at 20%. This one's at 40. GameStop was at like 70. That I've never seen that before. That's why we bought as much stock as we did. But but Beyond Meat, that's an interesting situation where it's the stock's been pretty dead, but I'm noticing that the high short interest stuff is starting to tick up a little bit because what's his name? I think Roaring Kitty came out and talked about Chewy today. Did you see that move?
I've been watching Chewy, but I haven't seen it lately. How's our Chewy?
He tweets something, and so but today it got halted and it reopens up like 30%. So the funny thing about high short interest stocks is when guys need to rattle a cage and get an explosive movement, you go to where there's lazy shorts. And look at Beyond Meat. The Beyond Meat's just been sitting in a range, hanging out at support, nothing really exciting going on there either way. But if you've rode that price train down, and Beyond Meat has gotten crushed in the last couple of years, absolutely crushed, and you're still sitting there, like, I don't know, man. Like, all that thing has to do is go up a little bit, and it'll go up a lot. So that's one that I've got my eyes on.
So we need to get a little interest in this, and this one's had some wild spikes. It's had some wild spikes, and here it is back sitting at those lows, ready for a move. I mean, Beyond Meat, that one's been on the radar for a little bit, but I haven't looked for a while. So that's an interesting one.
And they keep shorting it, and if that thing breaks up instead of breaks down, that might end up being a pretty swift one because you get into those short squeezes, and all of a sudden there's no sellers.
Oh, here's our short interest chart for. Oh, come on, put us on here, folks. Anyway, that's an interesting one, and I know that you like to really go after kind of the investor, like the investment sentiment psychology side of it, right? And
Huge.
I mean, I feel like we've just had like a mini preview of like a master class here of all the people that got posed on these previous meme stocks, and while they're stuck and hoping that history repeats itself, there's all these other opportunities that are out there that are kind of easy easy to identify. Now, obviously, we're not going to pick them all perfectly, but there's a lot of good candidates out there, and yet people are stuck on, okay, this one's going again. It's going to go again, right? And they tend to never do that. So that's an interesting point. I'm going to throw one out there that I actually made some money on, and I don't, I mean, don't judge, but DJT, anyone get in on that? That thing has been all over the place. That's the Trump trade, and I sat that for about 3 days and had a pretty good run on it. But it's back to it's back to kind of doing nothing. And so I think this is another good example of like something that has had its run, and everybody is hoping, and I'm not in it, I'm not doing anything with it, but everyone's hoping this is going to move again, right?
Look at that. Like stocks are funny things, man. They're just like they're a product of their investor base. So if you get something that's acting really erratic and irrational, it's probably because you got a significant amount of inexperience in there, not knowing what's going to happen, having to react to sharper movements, and it just creates an insane amount of volatility. So that's why I like anything that I'm doing when it comes to trading is trying to get in front of that crowd. If you're one of the guys that, you bought GameStop at 4 or 5, like we were talking about, hey, you sell it back to those guys for 100, 200, whatever, and it becomes their problem. But, that's it, the quality of stocks says so much too, because like what people are attracted to and what hits the message boards, it's always a fascinating thing to watch.
It is, and I feel like like we talked a little bit about last time. I feel like people have been focused on where's the next meme stock, or not even where's the next meme stock. Is one of the past meme stocks going to do something? And so they're wasting their time and energy sitting on something that is, as you have said, dead as a doornail. And B, do I finally give in and buy NVIDIA? Right? And that,
dude. There's a great quote that I once heard, and it's like some traders are always sitting there focusing on what was, but the best traders are focusing on what will be. And that's like, I think that's where this is at. You find a train that's already in motion. Yeah, you can play it, but like try to find what that next thing's going to be. And I've always made more money doing that in my career than the latter.
Yeah, for sure. The chances of having a second or third chance at getting into something that you missed are probably not existent, right? And so you got to think about what's the next where's the next action. So I think that's super interesting. This market has been so just divided, and it seems like there's so many great companies. And then just like we looked at Square, Block, whatever, sitting at all these historic lows as far as company metrics goes. And these guys are just making money like crazy. They're just killing it. But nobody cares about that right now, right? Right now they care about, are we in the hype and are we not? I think there's starting to be like a very confused case of FOMO, right? A lot of people have missed out, and they're like, can I keep missing out? and every penny higher that any of those stocks go is pushing the last person over the edge, right? Which gives opportunity for like the other, 80% of the market to finally catch up and do something awesome. I mean, the fact that we got a couple of these companies doing everything is like, it's so old, but yet it continues. And so getting that tip is going to be an exciting moment for all of us, I think.
Yeah, I mean, and it's interesting because we talked about that inverse relationship of some stocks last week, and like even this week on some growth stocks. You and I talked ROKU a few weeks ago, and now that Nvidia's come down, all of a sudden ROKU got down around 50, and it's been flying the last couple of days. Mid cap, small cap software, which is something I think that people really got to look at going into an interest rate pullback. These software names that took 20, 15% smacks in earnings season last quarter, those stocks were ripping today. MDB, CRM, mid cap software is making a little bit of a stage recovery. So to me, the thing I'm pretty certain about right now is that the market is actually opening up. And I think you can ratio that out between various different instruments, but like I think the things that you thought were dead and you've just decided not to look at anymore, I would encourage most people to double back and go take a look. Anything that you thought was dead in the water this week, ROK is a perfect example. It's been basically grinding lower all freaking year. It's a great company. It's mispriced, and it's only mispriced because everybody else just wants to focus on something else for the time being. ROKU looks great here. In the last couple of days, when that momentum trade started to falter, all of a sudden that thing's been killing it the last 2 days. So I just think the market's opening up.
No, I think it's great, and I mean, so to repeat your sentiment, you think that this will, when money starts flowing out, it's not going to crash the market. It's going to open up the other opportunities. Is that your thesis?
Yeah. So so this week I'm more bullish on the market right now than I have been in a while, and it's because I feel like the main problem with this narrowness just snapped last week. That the very day that we started this podcast, it snapped, and a new pulse derived from that. And the days that the S&P or that the market was down the most, breadth was the best. So how would you explain that to somebody? Here's a red day in the S&P, but oh my gosh, advances were 4-1.
Yeah.
Like it just, like breadth all of a sudden caught up the moment the market went down. It's really screwy for people to understand, but like as we get into more podcasts, I'll start showing you guys some charts of like the extremities of RSP to S&P, or the growth index to value index is mind blowing because it's exponentially distorted beyond the extremities from like 2000. So when people are talking about Y2K similarities with NVIDIA and stuff like that, oh no. The growth value relationship is like 4 standard deviations from what it was in Y2K, which is unbelievable. That makes you feel like something bad is going to happen. But what people don't understand is when that breaks, something really good and healthy is going to happen. And I think that's going to catch everybody off guard, kind of like it did back in 2021, 22, when you saw ARK explode, right? ARK in 2021 to 22 basically like went to zero. It went down like 78%, but yet the cyclical side of the market went up hundreds of percent.
Yeah.
And that's just that's the dynamic that this interest rate situation and experiment we did 12 years ago or 14 years ago. That's where it got us, some crazy, distorted extremities that I don't think people are really aware of.
So if you had to say, I mean, I think there's a couple of pain trades probably coming, but would you say that that's one of the pain trades that people are going to start to get worried? They're going to say, okay, we're going to get out, and they're going to get out and take their profits, and that's going to be great, and they're going to miss what is probably one of the bigger runs of the rest of the market?
Yeah, and what that's probably going to look like is it's probably going to look like an S&P or a NASDAQ that's flat to down, and it's going to look like the other side of the market that's the smallest component. Like if you looked at a pie chart of the S&P, what is it? 35% is made up of 7 stocks. The NASDAQ last year, it was pretty close to 40 or 50 was made up of 7 stocks. And so there's a whole lot of other stocks that could move a lot, and it doesn't move the needle on the index, right? So it could be that like the best gains are going to be found when the index stops moving, which is like, it's crazy to think about, but we've already seen it happen a couple of years ago. So, yeah, just look. Did you see like what FedEx did this week? I mean, FedEx has been down on the year as a consumer play, and then it goes up 15-20% over earnings because it just shouldn't be down there, and that nobody cared, and people are, just not exposed. They're, you know what I mean? So like, it's going to set up big moves for the cyclical side of this market.
Totally. I think that's. So would you say, I mean, is that where a lot of your attention is? Are you kind of focused on that cyclical side and saying like, let's
yeah. So this is the funniest convo because like when people sit me down and ask me what are my favorite ideas, it usually makes them like puke a little bit and think, oh okay. I am so my best ideas. Yeah. So if I could explain in my crazy senses, like to me, what's the best way to explain this? So any place where a thought process or an investment idea has been depleted, right? That would have been energy stocks back in 2019, 2020. Wherever Wall Street's one big pendulum. They throw all their money one way and then it comes all the way back out, right? And so that's usually where I go for where I think the best ideas are going to be, where you can make the most money over time. I am head over heels in love with China. Oh my gosh. I could do a 7-hour podcast on China and have you come back for a volume 2, because I would just go on forever. But I talked to some people last year and I said, what's going on in the China markets right now is going to be identical to what happened in 2008, 2009. And what's crazy is you saw China puke Q4 last year into January, and then it bottomed, right? The FXI, which is a measure of China, from January low to its May high, was over 40%, right?
Let's show a little bit while you narrate here, because
Yeah.
here is a little what's this wrong chart? Here is a little bit. Here's a good overview of hold on here. Let's bring this up, because I think this is worth keeping an eye on. Okay, there's just an overall look at China. Okay, go on.
So yeah, you've got a bunch of different names here. The FXI top row, third in. So from low to high. So this is very much like the way China kind of puked. I mean, overall zoomed out, it double bottomed, but the way it put in its bottom last time was very, very similar to 2008 in terms of the degree of extremities, the moves from high to low, all of that stuff. And the most important thing is that you were zoomed out really, really far on that China trade, right? China, like the Shanghai, or you go look at the Hang Seng, they haven't moved in 2 decades. Okay. 2 decades. When the last time you had a similarity to that was if you would have taken the S&P from 2000 all the way into 2013, it was still trading at the same prices. And yet we had adopted the internet by then. We had we were doing business, we were doing emails and cell phones and iPhones and all this crazy technology revolution. But yet China has not progressed financially from their market's valuation at all. In fact, they're worse off from their highs. But this year, so from low to high, the FXI rallied over 40%. Same way that the S&P did in 2009. And in 2009, the S&P kind of had a summer pullback where it started to look like it was getting ready to roll over. And this week, this thing, I think you want to keep an eye on the Shanghai, because if it does, I told some guys on Tuesday, I call the bottom for the summer. And if it does, and I think that, they'll probably tonight on the, on the debate, probably talk about, maintaining relationships and forward and abroad, blah, 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 blah. But if the Shanghai gets a little bit of confidence from that message, then all of a sudden, I think that FXI is going to rally to highs into year end. And this is a depleted market. Like every hedge fund and the majority of investment dollars have left because, Biden was posing some serious investment risk, saying that he was going to delist stocks. And so everybody just scattered. They sold everything no matter what. You look at a lot of the fundamentals of those charts, revenue growth, things like that, and they're still humming along and they're doing just fine, even though there's questions about their economy and this and that and the other. My point is that, okay, yeah, there's concerns, but you don't realize that the Shanghai is 70% off of its highs. If the S&P were 70% off of its highs, that would be putting in 2 pandemics, a recession, a depression. Nothing has ever gotten that extreme here, no matter how bad the case. And so those equities are cheap, man. And nobody's there. And the best part about nobody being in an investment is when they start rallying, all that money will come, all that money will follow. And that's why you saw that big monster move this year. Is some of the big fish end of Q4 last year, even some of the CEOs started buying in big chunks in the last couple quarters. So that process has already started. And I really am a huge fan of anything China here. I just think it's an absolute no-brainer.
China, I mean, these charts look about as good as they can look for, buying some dips, getting in at some lows. I mean, it's so funny because as we know, you can look at any of these charts, right? Here's BABA, right? Over the, history of BABA. And you look back at this and you think, man, when these guys were traded in the U.S. and so on, and we had this double bottom 15, 16, who here wouldn't have wanted to get into that, right? You get into
Right.
that double bottom, it rallies, 450%, nice little move, very little bit of pullback. But then you see it again over here and people think, okay, this time it doesn't recover. It's funny, right? If this were a meme stock, people would say, let's buy the heck out of this thing. But when it's a functioning company that makes grip loads of money and is growing like crazy and has a massive international audience and customer base, people go, they have housing debt. There's housing debt over there, so don't buy it.
It's the funniest thing to me, man. Like it is hilarious to me that people turn on the media and you get your news there. You get your financial expertise there from people that have no skin in the game, for people that don't know any better. All they can do is look at the chart and say it's down, it's bad, and they can tell you every bad data point about it. But when the bad data points are stacking up, man, like that's where opportunity is. Because you might not like Baba down here at 80, but I promise you'll be interested at 120. I know you'd be interested at 150. I know you'd own somebody you get time to get to 200. So it don't matter. Like there's characteristics of when a stock is empty, depleted, and done going down, and when big whales come in and start sniffing around a little bit and start putting on positions. Like I think David Tepper and Michael Burry's top two positions are China names. Like these are big guys that play that exact same sentiment process. They wait for everybody to get out of something. They wait until people hate it and won't touch it, and they're like, okay, you don't like it, I'll buy. And then another guy goes, hey, Burry just bought some. Maybe we should get some. And then off it goes. Pendulum starts swinging the other way.
And away it goes. And plus, I would wonder, like, of non-professional investors, how many people have China on their radar, right? Talk about a pain trade, right? People are going to say, huh? Baba? Oh, it's up 500%? How did I miss that trade? I was busy trying to manage my NVIDIA trade that's down 50% right now. And
yeah, they got different problems right now, right? So like when everybody's attention is somewhere, you just got to go start looking somewhere else. Where's there good value and where's good upside opportunity? Where are things mispriced from a just broader pessimistic point of view? Yeah, I get the problems in China, and you know what? Being marked 70% off of their highs is probably a little much, probably a little rich. So
there could be some, what's the term? Oversold. Might be a little oversold. Just a little bit.
I always think that, oh, go ahead.
Well, I was just going to say, I feel like the theme of this episode is go where they ain't, right? You've got everybody in these crappy meme stocks, hoping, praying they're going to come back. You've got nobody in China. You have, Cinemark has been murdering it this week. Probably the top performing stock of the entire market. So I think everyone needs to put a little bit more time and energy into triple checking that they're not in the crowd, right? You got to get out of the crowd a little bit. There's maybe some waiting with that, but staying away from the mainstream. I would be shocked. I don't really watch the NBC, but I would be shocked if those people that host all of their shows that go 24 hours a day would take any one of the recommendations that they're talking about or things that they're pointing out, right? Hey, you buy, don't buy it.
Yeah, all those platforms are just a way for, guys to come out and sell you ideas. And obviously there's vested interest in all that, but that's why it's hard to read other people's work. You don't know, like, they're out there trying to generate clicks. You don't know what their motivations are. That they don't, they're more looking at the, web traffic side of things rather than PE ratios and stuff like that. So it's like, I don't know. I used to write early on in my career, and I could go talk about a stock and I wouldn't have a position in it, but I'd have something good or bad to say about it. And that's who you're taking your expertise from, is somebody with no skin in the game. How that makes sense, I still don't know.
Yeah, for sure. You and I both manage funds for other people. We have nothing but skin in the game, and we've got our clients' skin in the game as well. And that's a whole serious business, right? We've got people to answer to every month, and so we better be looking at some of the stuff that is not maybe making the common radar, so we can make some bones. But no, that's great, man. Another great discussion. I think there's some great stuff to take from this, and as always, thanks for sharing some good thoughts. I've been watching June just kind of leaking. The majority of everything in June is just kind of dragging, but there's these little outliers that are just ripping and rolling, and it makes you wonder. I mean, do we have an interesting July ahead? Is that are we going to see a little interest in there? Are we going to get a little bit of movement?
I think you're going to see things open up, and it might not move the needle on the index because the index is only weighted to certain things. But if you want to judge that, watch the small cap index or watch the NYSE. Use that as like most people watch the S&P or the Dow or the Nasdaq. Watch the NYSE. It's a much more broader base of stocks. Watch the RSP, which is the equal weighted. You're going to see that, I think, probably start to lift and create some strength in basis points over the Nasdaq and the S&P, which is where I just think it's faulty weighted.
Yeah.
Actively managed index is all it is. So.
No, that's awesome. No, I think that's good to keep an eye on. We will continue to monitor all this. Let's have a look at a couple of these, some squeezes that are out there, and they're already literally well underway. And we'll keep monitoring that. But good stuff, my friend. Thanks for another good episode. We'll keep everyone posted on what we're looking at, what we're thinking, what are our favorites, and just keep watching. Leave comments below. Like, subscribe. What's the thing you got to say, right? Do it. Follow us. Yeah. We'll keep trying to give you guys as good a content as we can. But Jeff, as always, my friend, thank you.
Always a good time.
On to the next episode. We'll see you guys.